Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, March 27th, 2009. Well, we are seeing a down day on Wall Street, folks, and those of you that are premium subscribers know that we had been calling for this yesterday. And the key here is this, guys. You have a lot of key resistance levels we ran into. I covered them in the previous two intraday videos as well as the nightly videos. And you have to understand that that gap fill at around 82.75 to 83.50 or so is a major resistance level on the spiders. All right, and you're starting to see the weakness develop here. This market has run up almost 20% to 25% in the last 2.5 weeks. And honestly, it's time for a little consolidation and pullback. I mean, it's just that simple, folks. It's like you run a 3-hour marathon, and then someone says, "Oh, could you run another three-hour marathon without a 2-minute break?" You're going to say, "You know what? Give me a chance to drink a little water, take a little breather. All right, and then I'll consider it." Market's the same way. It's like a breathing entity. It needs that effect. So when you see the charts here, folks, this is what you're looking at. All right, you can see today we gapped lower. And I'll talk about the key levels here. I've drawn every key level in. I'll draw in some more key ones for you, but you have to be watching these levels. They're very important, and you have to understand how to do trend line analysis. Now, the trend lines on here are your key levels in the portion of the chart that we're in now. All right, there are some other key levels I'll go over outside of this portion that you're going to need to watch. We'll look at the 60-minute chart as well, but right now I want to focus on the intraday 10-minute. Now, what you're looking at again is the market on an intraday basis, the SPY, and you can see here we ran up into the close and made a beautiful double top. Know your double tops and your double bottoms. They will be impressively key in your analysis. Okay, so number one, yesterday you have to understand, first of all, every pivot point on the chart needs to be recognized. Here's your pivot point to the upside. You opened the market here, you pivoted up here before selling off. Here's a secondary pivot, third pivot, fourth, and then upwards to a double or a first high, new high of the market, pivot low, and double top. So here's your double top line. You draw that in. You got to have that in because the next day you know that's going to be resistance. You're right at it right now. Now, the secondary points you're going to want to do is this pivot. Just draw it over and notice how this high right here before a little bit of a pullback, before this massive rally, was a key level. All right, so you have to have this line straight across. It coincides right here with this pause at the 20 moving average before it broke down and then rallied back up. And then notice the highs of the day today. The highs of the day exemplary. All right, and you have to have these levels in. Again, trendline analysis has to be fully understood, and if you're versed in it, you will trade 100 times better. You will invest 100 times better. Secondary point, you want to have your lows of the day from this initial point drawn in. In addition, it coincides with this pivot. So if you really wanted to do it, you could just put your pivot in. I found it interesting that this pivot low right here pulled back to the opening candle's low on the chart, so I drew it all the way across, but really you don't even need that. All you need is this pivot point, draw it right across, and you're going to get a major level in this market. Now, where's the level, you may ask? Well, first of all, we opened right on this point. When you open on it and you're gapping down, you want to see whether or not you move up or down. If you close above, you're going to start to rally, most likely up to this point. If you close lower, more than likely you're going to go down and test the bottom pivot, which again coincides with gap fill yesterday and bottom pivot from yesterday. See, from 2 days ago we closed here, and then we gap filled yesterday before rallying, and I covered that in yesterday's intraday video. Okay, so these are your key levels, and they all come into major play today. And again, you don't even have to know what today's trading is, to be honest. You could be looking at this and just be drawing your pivots in for the next day, and that's what we obviously do for our chat room participants and our nightly video participants, our premium subscribers at InTheMoneyStocks.com under the Research Center. Okay, now again, so you gap lower and you move and you close down. Right away you have to say to yourself, I'm going to start looking for more downside to the secondary pivot of support, which was gap fill from yesterday from the previous close and this pivot point from down here. What happens? You get two inside bars, which is an in spirit of bear flag hugging the 50 moving average. That's a bearish play. Have to know that, folks. It's a bearish signal. Right up into this trend line where the trend line crosses the 50, what happens? You get a sell signal, and the market starts selling. Where does it go? Perfectly to that lower pivot point. Once you get that print, that's your. If you're short this point, if you're short here or anywhere in this area on this bearish flag pattern or on this close below, that you have to move out. You have to know there's going to be major support. At that point, the market starts to rally. You get a little pause on this. See how you have a green candle, red candle, green candle? That's telling you it's pausing on this resistance point. You're also hammering the tops of your candles are touching the 50 moving average. You move up, and now you're hitting the 20 moving average. And all of a sudden, you have a little bit of a topping tail here, folks. And you pull back, And this could be looked at as a shorting opportunity. There's no doubt in my mind you could look at a short there. But ultimately, you want to see when you confirm it. You confirm it in the next one. You close exactly at the low, so you want to be cautious there. And then you close up again, down, up, down, and kind of test that higher high. This is really the point. You hit this high point, which is, the pivot point from here, and the opening high pivot, going back there. And at that point, that's really when you can start to be a little more confident. Once this market's not able to break above that line, and you've kissed it really twice. I mean, you can even look at this candle with the topping tail as being that point of pivot as well. And again, you don't close above that high here as well in this green candle. So once you get that, then you can start looking for a down candle. You get the down candle, that's your sell signal. Where do you go? This same trend line again becomes major support. So again, well, it's not as heavy support. Why? Because you've hit it multiple times, but nonetheless, it is support. So at that point, you start trading up. What is this flag pattern? It's the same pattern as this pattern right here. Develops right here, down, sideways to up, bear flag right into the 20 in this trend line, and then what happens? You break lower, and that's where we are currently in this market. So it's all about analyzing the charts, folks. It's all about knowing the charts and how they're going to play out, putting the probabilities in your favor. If you can go to a casino and have 80% to 90% probability you're going to be a winner, you will clean up and you would go every day and never work a day in your life. That is the key about understanding trendline analysis, price, pattern, and time. Everything is pattern and time, guys. What time frame was this right here, this pivot low? 10:30, right between 10 and 10:30. We talk about these pivot highs, pivot lows. This pivot low right here before a rally. What time? 3 o'clock. Boom, right up. Right down here, pivot low, 3 o'clock, right up. 10, 10:30, 3, 3:30. Watch for these type of moves, guys. You have to watch for that. You have to understand that stuff. All right, now where could we be going? You have a little bit of a probability now of creating a bearish flag pattern and then breaking down to this support line. This support line right down here. And where will this place be? Let's get a quote on that. That would be approximately 81.50, the lows of the day. You have your double bottom support now, and the support all the way goes back. However, if we do start testing that multiple times later today, it may not be that significant a support line. Why? Because you've hit it once here, and it was a point back here. So ultimately, every time it hits, it gets a little weaker. And you have to remember that, folks. All right, now, again, look at what we're starting to do. You're starting to get a little bit of a bounce. Too many amateurs go short at the lows of this candle and don't wait for the bearish flag. Sometimes it can go straight down. I won't deny that. But too many times, amateur shorts, try and take it right there at the close, and then they get washed out on this little sideways bear flag, and then they say, well, I got stopped out, and then it broke down. How come? Well, because you're not waiting for pattern formation, okay? Pattern formation is so key in this pattern, in this life, in this time frame analysis, price, pattern, time, and trend line analysis. Now, guys, just to reiterate, we have our premium subscriber service, which it details these videos in the nightly video, much more. We go over our daily analysis, the daily charts, the weekly charts, the intraday 60, 10-minute, oil, gold, the dollar, and individual stocks, often in those videos, and it's all guidance based on these formats. All right, so it's very key that you understand this, and we teach it. We don't just give you like points. We teach how we're getting this stuff, and that's really the important thing. We're here to guide you guys. We're here to educate, and that's what that research center also contains: weekly market report, daily market report, pro trader watch list, you name it, technical tactic, educational video. We really try to give you guys the best ability. Now, starting to break lower here, watch this. If we start to break down, you're going exactly here. This would be your target for that move in this market, and we'll have to watch. Now, again, you could still pause here, but you're starting to break. If you break the low of this candle, you may just continue to sell all the way down. We'll check back on that in a little while, all right? But right now, you're getting a little more of a bounce, and we'll continue to follow that. Let's go to the 60-minute. 60-minute chart, I mean, it is just very overbought. There's no doubt in my mind here. There's going to be a trend line right here of support. You guys can see connecting the low to the low. So if we break this, and look at why we're hitting support down here, folks, and I want to reiterate that. This area right down here, anywhere between 81.50 and 81.80, heavy support. Why? Well, because the 60-minute chart's hitting the 20 moving average. So if you understand that, you have to look at multiple time frames, and it's going to enlighten you so much more. So again, if we break this 20 on the 60-minute using a larger time frame, you may fall all the way down to this trend line and then possibly even touch the 50 moving average, which is really right on this trend line. So really focus on this now, guys, because I think we could be starting to break down a little bit in the afternoon session. One thing you're going to have to watch, though, is the 3 o'clock time frame, because every day for the last 2 days at 3 o'clock, we've been seeing massive buying programs coming in the financials as these late-to-the-table funds And again, remember the end of the quarter, window dressing is starting, and again, they're all trying to buy these financials that have rallied huge into the close, so they're buying them up here. Now, it's the stupidest thing I've ever heard because they're going to probably pull back about 20% or so, and then it would be a much better buy. But these funds want to show that they had and participated, and the people that received their statements don't know that they picked it up on the last day of the quarter. They don't know. So in any case, watch for that at 3 o'clock. That's a little update, and we'll talk to you soon. Take care.